Good evening and welcome back to the latest edition of the InvestTalk market analysis for the week ending September 27th, 2024. And this week was titled the video Markets Pause at New Highs. And that's really what you got. You can see here, very mixed bag, right? A lot of green, a lot of red. Markets didn't really go anywhere. Nvidia was down at the end of the week, or the last day of the week, but Nvidia overall was positive. Microsoft down about 2%. You had a few banks that were weak. Visa got hit with that lawsuit. They were down 3.6% on the week. So, kind of a mixed bag. Not a lot of huge winners. Tesla was up pretty nicely on the week, but, just overall a mixed bag. And we'll get into the charts here in a minute. But first, I want to get into this, which would be the economic data. Monday, we had the Richmond Fed Manufacturing Index that was down to the lowest levels in the last year. So that was interesting. Continuous claims for unemployment did tick up as well, from 1.82 to 1.83.5 million people that are on the unemployment doles. So while this was pulling back, you had a pretty nice jump here week over week. We'll see if we get any momentum to that to the upside. That would certainly push the Fed to be more aggressive with their rate cuts. New single family homes sold that did in August. This is lagging. So understand that, right? We're near the end of September here, and this is the August numbers that did tick down, but it shows you that despite interest rates coming down, mortgage rates coming down, pending homes, new home sales, still in an uptrend, but that's a pretty healthy tick down. So once again, are we going to see a more zigzag type of pattern like we've seen for the past year or so? Or will this, have another leg lower this month? So we shall see. Pending home sales index that was kind of flat, slightly up. So that was a little bit better, but still, kind of at these low levels that we've been at since the beginning of last year. Total vehicle sales that ticked down as well, 15.5 million vehicles in the month of August, and even with lower interest rates, that hasn't really helped it. Right, it hasn't really helped much. So, very interesting to see that. Is that a sign that maybe people are a little bit more weary about their job prospects and they aren't going out there making those big ticket purchases like a new car? So that's interesting to look at. Durable goods month over month that was flat after a big jump last month. Not much to see there. This is Q2 GDP 3%. It's very lagging. So we're at the end of Q3, which the GDP now has 3.1%. So we're back to back, roughly 3% GDP, real GDP growth, and frankly, you can't be mad about that. I mean, that's not recession. Everyone's not going to call it a recession. That's not a recession, right? So we're certainly not in a recession, but interesting to see what that was in the second quarter. But once again, very lagging. Core PCE. This came out today on Friday, and month over month, it was a tick down. That was a positive for the potential of the Fed cutting rates more aggressively. You see that here, PCE, core PCE year over year, also 2.68 ticked up a little bit, but that's a lot of that's base effects. But if you look at the Fed watch tool, you'll see the odds of a 50 basis point cut did tick up a little bit. Now, I still see it as a mixed bag, but obviously the Fed wants to get to neutral. They want to get to neutral. They want to get to a level where their rate policy is not contracting the economy or growing the economy because they see the risk is fairly balanced. So, based on the various rules, we're talking a neutral policy, probably somewhere in the threes, and we're still at four, where are we, 4.75 to 5. So they probably want to get there quicker than maybe a lot of people are assuming. But I think the big question is what happens into next year, right? December, this has the market has them cutting all the way to below 3%. And I think that is a little extreme. I don't think the economy needs that much cutting. You see that with 3% GDP growth, which is above trend consensus, long-term trend growth. And so I don't see a reason to be super aggressive, but I understand their rationale at least from here. So I wanted to highlight that. It's super important to follow what the Fed expectations are going to be going forward. Now the S&P, this is kind of that pause week, right? I look at this very choppy. It was up on the week, but we had a very choppy week. You look at the Qs, or let's look at the Nasdaq here. Okay, so here's what's interesting here with the Nasdaq: lower highs. We know that the S&P is tech heavy, and if the Qs are making lower highs here, what does that say about the tech sector? Something definitely you want to be on watch for, because there were a few stocks that were, um, I don't say rolling over, but certainly had a weak close. Nvidia was one of them. Microsoft was another. So some of the bigger tech names definitely were a bit weak as we closed the week. Apple kind of chopped sideways. That was fine. If you look at the growth to value, that was also a bit choppy. Let's go to a weekly and see. Yeah, this is a little topping tail here. This is indecision. So this is a bounce, and I could easily see this fall to the downside. If that's the case, I think you could see a continued rotation in markets. And all this is happening underneath the a weakness in energy. You saw energy have a nice close to the week, but was certainly down on the week. What was interesting is I think the weakness in energy was really front running the news that came out yesterday, which was that Saudi Arabia is going to increase production. They're tired of losing market share to U.S. shale, for example, and they're willing to allow prices to come down and stay low, in the 60s area, and regain market share. And that's something that was an announcement. And what's interesting is you had this rally on Friday, and pretty nice reversal. So see if you're getting follow through on the energy stocks. That could have marked a bottom in sentiment on that news yesterday. So we shall see, especially look at making this higher low here. Another big news item was China coming out with massive stimulus, and maybe I should change the title of this video to include that, because it certainly was a very, very important event, and that sparked a lot of rallies. A rally in like coppers, look at like Freeport McMoran had a nice move there. You had uranium, URNM, that had a nice move that up as well. But overall, look at KWeb, which is the Chinese uh, tech shares just blast off. And it was really a bazooka saying, hey, we're going to help support the equity markets, allow uh, the lend to companies to buy back shares. They're going to uh, lend to brokers to buy up shares, and just really support the equity markets. And that's why you saw this blast off here. And frankly, I think it could have legs to run. And typically, when you have the Chinese central bank easing, what that does is it sparks the commodities market, and the commodities market is because they're a big driver of commodity demand, right? And you see this here. This is the Bloomberg Commodity Index that's starting to break out now above all the major moving averages. So I think this is a start of maybe that next rotation in markets as we close the year. Obviously, we have the election coming up, and that's going to be very important. But overall, commodities just remain, I think, a great place to be. Now, gold does look a bit overbought, a little bit toppy. We closed the week weaker. You saw GDX that closed the week pretty much near the lows. If you go to a weekly here, this is a bit of a topping tail, okay, on pretty high volume. So, at resistance, look at this breakdown level for 2022. So it's natural to, I think, see some resistance here. Do I think this is the end of the rally in gold and silver miners? I don't, but I do think you could see a bit of a pullback and consolidation in order to attack the all-time highs, or the highs from 2020 on the GDX. So I think there's likely a move in gold higher in the medium term, but it's pretty overbought. When you get this, look how far away this is from the major moving averages. It looks a lot like this. You go through a consolidation period. Now, I don't think we're going to go through a consolidation period for that long, but to allow the moving averages to catch up, I think you could see gold and silver come into some level of consolidation. You see that with silver as well, hesitating at the highs. But overall, the technicals look very bullish. So you can't really be too upset about that. Let's see. Are there any others? Any other news? Any other topics that I want to get in the VIX. The VIX was interesting as well. We did close the week pretty strong. And this is a kind of a bullish wedge pattern. So you see another spike in volatility next week that could pull equities more broadly down. I think that's certainly possible. But when you go to this ratio, which I always talk about, which is the short-term junk to short-term treasuries, we close near the high of the week. Okay, so there's nothing that tells you that there's going to be a major market pullback. But we're after the Fed meeting, 50 basis point cut, market like that, we're a bit overbought, and going into we're still in a seasonally weak part of the market, September into October. So could we get more choppiness once again between now and the election? I think that's very, very possible. So that's where we're at, and you have to adjust your strategy accordingly. I hope this helped all of you. Appreciate you all for tuning in, liking, and subscribing to this video and our podcast, Invest Talk. And a reminder that the contents of this video are for educational purposes only and should not be construed as a recommendation to buy or sell a security or to participate in investment strategy. The views are my own and do not represent those of KPP Financial or those associated. Have a wonderful weekend.